lack of a better word, is good. Greed is right. Greed works.
Hello, everyone, and welcome to episode 46 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out, our net worth dropped from 44.6 down to 43.9, almost 44 trillion. So just a little bit of a drop. The big news was that RakeM Insurance stock price dropped to 14.68. I think it's the lowest it's been in years and years. We did make a lot of money off commodities, and we have reinvested in all of our commodities except for oil. And we'll talk about those some more here shortly. So we got through, started at the top of the list, and we worked our way down all the way to, I guess, Komatsu? Or maybe all the way down to Toyota Europe. I forget exactly where we left off. But the thing is that we've got kind of a change of plans. So I was going to work the rest of this list because all these ones down here at the bottom haven't been worked in a while. But instead, what we're going to be doing is we're going to be working on this first group right here. That's our top priority. Because what's happened is when I went and updated my spreadsheet, I noticed that the GDP growth rate is on the rise. So in episode 45, it got all the way down to negative 8.5, and now it's up to negative 6.8. So what I've done is I've resorted, after updating it, resorted my spreadsheet by industry size in descending order. And this first group of 12 is worth more money than all these others combined. So what we want to do is we want to grow these up to have as big a market share as we can. And with the stock index and the GDP growth both on the rise, I want to get that done before the stock prices in these industries on our competitors, before they get up above 100% of their net worth. So I want to take advantage of any bargains that exist now before they turn into, or before they stop being bargains. All right, so we're going to deviate from our original plan in order to get this done because it's a higher priority. There's more money at stake in these industries. But first, what we're going to do is we are going to have RakeM Insurance buy stock index futures. We paid out a bunch of money at the end of December, and hopefully we'll have some counterparties that can engage in those with us. Then spot crude. If he gets up above 90, we're going to try to sell it short, have PBR sell it short. All right, wheat and corn are kind of a disappointment. They've got two different cycles, one that's low and one that's high, and it looks like it's resuming its low cycle again, which means that we'll be selling it. This is corn. We'll be selling corn at like $5.50, and wheat, we'll be selling it at the low end. Let's see, the low end probably right at $6 rather than $6.50. So we'll lower our sale price on these from where they are to 50 cents lower. Okay. We already have silver, gold, and oil, or not oil, silver and gold as well. Silver we're going to sell at 20 and gold at 14.50. All right, so the interest rate is heading down, which is good for all the banks and all the industrials. Let me show you what the bank industry looks like now. So these are actually in okay shape comparatively. I expected this to be a lot worse during the subprime crisis. And here's what the insurance companies look like. Got a lot of C's and D's in here still, but it looks like it's improved since the last time we looked at it. So before it improves much more, we want to go ahead and buy some index futures. Look at that, just shot up another 150 points. So let's go get that done before anything else happens, and then we'll come back and we'll look at whether or not we want to sell short crude. We're going to buy some options on Toyota, and then we're going to check on all these companies that have stock options already and see whether we need to sell them off before they start going back up, or if they still have room to fall. And we'll either cover these and sell them off, or we will adjust our growth rates if we think that we can make them drive those prices lower. All right, so that's the plan. We're going to go ahead and start working it, and I'll be back in just a minute. Now RakeM Insurance has more index futures to go with the ones that he already had. We got quite a few. Not sure what the total notional value is, but it's quite a bit. I think it's somewhere around, let's see, 20 times this figure should be about 600 billion. So that's good. And crude is down a couple of points, but I'm not sure if he's going to stay there, if he's going to head back up. We're going to wait for him to commit to one direction or the other. If he falls to 80, we'll sell it short. If it keeps going up, we'll wait for it to peak. Silver keeps hovering between 15 and 16, never really getting up any higher than that. Wheat and corn still too low. Want those to go up. All right, now when we get done, hopefully, when we get done selling these commodities off, all of these holding companies should have excess cash that we can disperse. So that's what this XD question mark is that after we sell off these commodities, we want to disperse any excess cash that they have. All right, so what I'm going to do is I'm going to hit these ones marked in yellow first. Starting with PBR, he's got some oil sold short, and I think the exercise price is around 95. So we're actually going to come back to him. Hopefully this price will go down some more before we have to do anything with it. So first one we're going to touch is Toyota. And the deal here is he's very capable. He's growing negative because of his market share. And his price has been on the way up because the returns are finally rising despite this negative demand growth rate. So what we're going to do is we're going to buy options on him before his stock price goes up any further. And it might take a little while for his stock price to really hit its stride. So rather than risk one of our other companies having that investment, I'm going to do it myself. So I'm going to buy calls and sell puts on Toyota, and I'll be right back. Well, I wasn't able to get the full amount. I only got, I think, 75% call options and only 10% put options. We're losing money now on RakeM Insurance, a whole bunch of it on the call options because his stock price is down so much. We're actually making some money on the put options somehow, but hopefully that'll improve, especially after we disperse this cash. All right, and our index is on the way up. So, crude is up a little bit. Everything else is in the same shape it was. So let's unmark this here. Let's go over to Fortis. He's got options on Morgan Stanley and Nomura. both of which have a positive return. He's growing like crazy. Looks like there's not much more room for Nomura to fall, but he's kind of in bad shape, especially with that dividend. All this debt, super high dividend, 15.64%. Let's take a look at Morgan Stanley here. He's out of cash, trading at almost 3 times his stock price. He's making money on the index, having it sold short, so hopefully this profit will go away as the index rises. And then on options, he's losing money on the options he has on Nomura. So his income, he says it's going up, but I don't believe that. So let's see, where do we stand? Has our management gotten any better? No, it's not. So I would like to grow here, but I don't think there's a need just yet. The industry is worsening right now. And we declare at the end of this month. So March 1st, we'll come back and look at this again. All right, so let's go over to Hewlett-Packard. This industry is worsening. Our management's doing a little bit better. And we're not losing any money, but we're not making any either on these options. And he's got a decent return, and he's the only one with a decent return. And he's got a AAA credit rating too. So we've got him frozen, and he doesn't have any cash left. And his income's way down. Income is way down. And the industry is worsening. He's reasonably competent too. If this return was down around 10%, I would say let's keep him. And we wouldn't have to do anything else. Let's see, we are reasonably competent. Let's lower our R&D to 12%, and let's increase our growth to 15%, and make sure that these returns come down. We are supposed to be making some money. So let's do that, and then we'll come back and we'll look at it. We declare, okay, so we'll come back at the end of April and look at this one again. Next up is Lucky Gold Star. His income is down. And we have options on Imperial Chemical, and he's in bad shape. He's got a good return, but his credit's terrible. He's got all this debt and only $21 billion in equity. And he's got stock of Del Webb too. Del Webb, his earnings are down. Here he is. So we can up our growth rate here to make sure that Del Webb doesn't recover too. We got plenty of cash. It's already worsening though, so I guess maybe we can just leave it. We're growing at 13%. Let's make that 15. And let's lower our R&D to 12. So that should help ensure that his returns don't go up, so hopefully his stock price won't go up either. 2 cents. So I guess we're going to hang on to these options as well. He declares May 3rd. Okay. So we'll come back to him first week of May. Let's go take a look at Waste Management. He's got options on Donaldson, and Donaldson's stock price is up. So here everybody's growing. The demand growth is lower than what the growth is, but so the industry is deteriorating. And we've got debt here. Let's give him, let's see, we want about 7 billion. Let's give him 14. Oh, we can't. We can't. So what do we do here? We're reasonably competent. So let's make our R&D 12. Let's bump up our growth rate to 20. We'll leave the dividend alone because we're going to go into more debt growing at 20%. We just have to hope that he comes down. His projection is for his income to be way up, but part of that might be from the swaps. He's supposed to make 1.8 billion off the swaps. Let's see, we declare at the end of March. That's not going to go back up, so I guess we're going to have to cover this one. Let's cover this one before it costs us more money. Alright, let's go take a look at HP printers. Income is still up, but was way better last quarter. Alright, these are way down. And we sold short Toshiba when he was at 400 and something percent. And now he's all the way down to 250. So we're making about 6 billion total so far. Demand growth rate's negative, and Iomega's killing it. And we're holding steady because we don't need to grow while he's killing it. Shiba has a ton of cash. And his income is headed up because of it. Plus he's making money on the interest rate swaps. His bond is only 6.65%. His stock price is down to 24. We can make a profit on this now. So let's go ahead and sell these off too, because with that income from the swap being so good, let's just take what we can and we'll call it good. All right, let's go over to CVS. His income's going up. Industry's deteriorating, and we're growing at 60%. We're starting to go into debt now. And we're making a little bit of money on each one of our options. We're losing money on these on McKesson. So let's take a look at the industry. We're growing at 60%. Payless is growing at a huge rate. And the returns are dropping down into the single digits. So he's still got good credit, and so does he. Maybe what we want to do is we want to buy options, or buy put options on Payless here. Of course, he's kind of small. big are we? 37. Of course, these projections are only true. This is what it's going to be projected from a year from now, and that's only if we grow at this rate. We currently have 30%, and growing at 60% annually, we'd end up with an extra 6. So, I think what we want to do is we want to keep the pressure on for another quarter. Let's see what the recommendation is on these. All right, his income is supposed to go way up. For some reason, it doesn't look like it should be going up. I mean, he's making a 10% return on the, oh, that's per quarter too. That's quarterly income. That's more than 10% of his net worth. He's got the index sold short and he's losing money on it. Alright, gold is ready to sell. It's only 9 points away from his sale point. So, as far as these options go, I would like to hang on to them. We're gonna hold on to them for at least another quarter. We can check again in March and see what direction those prices are headed in. So I'm going to leave him marked, and we'll come back and look at him again. But let's go sell off all of our gold. All right, so I'm going to fast forward while I do that, and I'll be right back. The price of gold dropped just as we were selling the last little bit that Yum Brands had, but he was able to take 190 billion in profit. So I went ahead and sold it at that price. And fully expect everybody to be able to disperse some cash. Silver is on its way up again. Let's hope it keeps going up. So next we're going to go look at Herman Miller. I forget who he has options on. Whirlpool. And he's losing money on it. So let's go take a look. Whirlpool, his stock price is down. The returns here are okay, except for Whirlpool and the people below us. This looks like it would still be deteriorating thanks to our growth and this 0 up here. It is deteriorating. We're very capable. And we only have 8% of a market share. And nobody is priced to buy. So let's up our growth rate. Let's grow at 15%. Let's see, how much would he be downsizing by? He's 47% and it's 19 billion. We are 8% and it's 4 billion. 5% of 40 or 19 billion is what? 1 billion? So we would have to grow at 33% or higher. So let's change our growth rate to 40%. And his price just shot up. Either that or his net worth just dropped. He's got more debt than equity. Does he have swaps? Okay, he's going to make 700 million on swaps, which would be a 50% profit which is kind of crazy. I don't think there's much we can do here. We're gonna have to take this loss. We can't affect the prices enough to make a difference because of the swaps. So let's buy these back, or I mean, excuse me, sell them off. Okay, since we are not going to have options here, let's dial back our growth rate to 1% and let these returns get higher if they can. Industry is still deteriorating, which is fine because we want to buy these guys up when their prices come down. Alright, so we got some stuff to do over at the insurance companies and everything, but we're going to hit those after we buy competitors, if there are any to be bought in these industries in this first group, this first 12 stocks here. So let's go to SK Telecom. We have 85 billion in cash to work with. And basically anybody 140% or lower is what I'm looking to buy. And there's nobody to buy that's within that range. Let's take a look at Frontier here. He's 92 billion for a $60 billion company. It's just too high. All right, let's go look at Twitter. Here we've got 63 billion to work with. Okay, let's buy up Yahoo. And I guess that's it. Let's buy up Yahoo and merge them in. So we added another 1.3% to our market share. We're growing at 60%. So the industry is deteriorating. Let's see, Amazon's got terrible credit. Let's see. Oh, that's way too much of a premium. Anybody else? Anybody at all? Nope. I mean, with it deteriorating this bad, we might be able to buy somebody up for less than they're worth. Let's see, they declare at the end of the month or 5 days from now. These are bad shape. Might be able to buy gold again real soon. Alright, let's go look at Red Hat. We've got 16 billion to work with here. Buy Intuit and BEA Systems. Let's take a look at Intuit. 100% public. 4 billion plus another 5 to pay off his debt. Let's buy him and merge him in. All right, let's look at BEA Systems. He's 2 billion to buy and another 1,100 to pay off the debt. Okay, let's get rid of this debt. The industry is deteriorating and we are reasonably competent. We need to cancel our swaps. The demand growth rate is 5%. Let's lower our growth rate to 30. Real Networks is going broke, so we could sell options on him or buy put options on him. His income is down. He doesn't have any swaps. Just got massive debt. And he's losing money on Imperial Chemical. So let's, we don't have any options now. Let's give him some money. Let's give him 30 billion. And I don't think that we'd be able to get 100% because that company's pretty big. Real Networks. Let's see what he's worth. 300 billion. So we're gonna have to buy just a few percentage points at a time. I'll fast forward while I do that and I'll be right back. We managed to buy puts on 100%. We had to do it in 5% increments there at the end, but we did get it. And with his income going down, I don't know why this says buy, especially with the industry deteriorating like it is. And he doesn't have any swaps to protect him. So hopefully this stock price will come down and we'll make a nice profit on those. Right, but while we were doing that, these kind of all went funky. Silver is way down again. Gold is almost ready to buy. The index is up. Crude is up. And spot wheat is ready to sell. So I'm going to sell off all of our wheat. And I'll be right back. With the price of silver this low, let's go over to Phelps Dodge and see if we can buy more futures of silver to add to the ones that we already have. Wow, and the Contango is really low too. Oh, he's losing a lot of money on the futures that he already has. We're going to have to give him some more money. But if I remember correctly, we gave him like 700 billion so that he could buy physical silver. So we should have plenty of credit. Let's go ahead and buy this up. The bank should have plenty of money because we just sold off wheat and gold, so I'll fast forward while I buy as many as I can. I'll go ahead and go into debt doing that. We'll take care of that when we get done. We managed to get another 2,000 or so, I think, contracts to go with the 6,000 or 8,000 that we already had. Corn is 3 cents away from being ready to sell. I'm not going to wait. I'm going to go ahead and sell it off. And I'll be right back. Alright, so we sold off everything but silver now, and we had Red Hat get options. So let's go over to Kmart. Income here is still going up. A little bit of debt now. All right, there's nobody priced to buy, and we're growing at 30%. And our return is still above 20%, so we can keep going. And it looks like Dayton Hudson is going broke. All right, so he's 100% owned. And wow. What stocks does he own? Sanofi Aventis and Broadway stores. It looks like he's been selling them off to cover his debt. His projection is for $1.08, which would be up from last year. If his return was lower than, if it was below 15%, I'd go ahead and buy put options on him, but I think we're going to hold off. Just grow at this rate and see what happens to these returns. If he goes broke, our market share will go up to like 35% and the returns will get up above 40%. So I think we'll just keep going the way we're doing right now. Costco drops, we'll buy him, but right now there's nobody to buy. Let's go to Fortis. Alright, we could try to get Credit Lyonnais here. And maybe Daiwa Securities. These guys are both pretty small. We've got plenty of extra cash. Let's go ahead and buy up this one. All right, let's get this one too. Let's put this $6 billion towards our loan, and then let's take a look at what we're growing at. Got index futures that hopefully will make some money now that the index is going up. All right, so the industry is improving, and we've got 22% now. Let's cancel the swaps. Morgan Stanley has finally lowered his growth rate, and we have options on him and on Nomura, so we want this industry to be deteriorating, so we need to up our growth rate. Let's grow at 30% and see where that puts us. Industry is still improving. Let's go to 50. Well, let's go to 45. We're going to have to look at that one. All right, now the industry is worsening, which is just fine. Let's see what our options are worth now. All right, so we're still making money on them. Well, no, we're starting to lose money on Morgan Stanley. price is going up. But that growth rate just brought their returns down by 5%. So, do I want to do anything more here? That's the question. Do I want to make it 60%? Drive his earnings down even further? His income's going to be way down next quarter. As is ours. Let's make our growth rate 60%. We can adjust it downward if we need to. We want to make money off those options, because that's worth a lot of money. How are we a counterparty here? Let's get rid of these. Somebody we bought must have had those. So we're making a little bit of money here. Maybe not. Looks more like a wash because of these bottom ones. The Mura's price is going up. Up 111% in the last 3 months. And doesn't look like he has swaps. He's got stock of iOmega, and his income is down. He's still trading at a premium though. Which is weird because look at this return. Alright, we're going to hold off just a little bit longer. Like to see some profit on those, so we're going to grow at that huge rate. And hope that this knocks everybody down and we can make some profit on those. There's nobody to buy, so let's go over to Nvidia. Income here is down. Growing at 12%. Returns are terrible. And basically, whoops, analog devices and LSI here. And looks like we picked up Micron. So let's see who owns analog. Nobody. 2,200 million. And Nvidia has plenty of cash. Let's go ahead and buy him and Micron as well. Alright, now we only own 37% of him, so I'm just going to buy his assets and then sell him off because he's trading at a 150% or at a 50% premium. So I'm going to buy 2,500 and leave him with the rest, and then we'll sell him. We have Harrah's Entertainment. How'd we get him? Let's just have Las Vegas Sands buy him from us and liquidate him. Alright, we got an antitrust against an Inditex. Just going to say no. No damages. All right, let's go back over to NVIDIA. There's one more in here we can pick up, and that's LSI. Let's cancel any swaps we have and pay off the debt. All right, let's take a look at our options and futures. Let's cover this. This one we're making money on. Let's get rid of it too. Phelps Dodge is the target of an antitrust. Let's go see what's going on there. He's only got 48%. And he's growing at -10. So I'm not going to worry about that one. All right, so let's go back to NVIDIA. So we could buy Micron, but he's got practically no assets. Oh, that's the one we just sold off. What am I talking about? We just sold him off at 150%. So the only other one really that's even close is HeartMax and I forget what this is. LGI Semiconductor probably. Don't think we want to mess with this one. He's losing all kinds of money on the index. The only thing I can figure this cash came from was these bonds. Guess we haven't been paying close enough attention here. Gold is close to being ready to buy. It's time to sell short crude. Let's go over to PBR and sell short crude if we can. All right, I will sell as much of this short as I can, and I'll be right back. So let's go over to IBM and see what we can do for him, and then we'll get back on checking these options again. So his income is down. His projection is to be down, but the industry's improving and we're very capable. Got a bunch of money on hand. Let's see if anybody's ready to buy. Yep, got a few. So we can buy Toshiba computers here for 2%. And GIAC for another %. Might be able to buy Acer too if we want to. Let's see. Yeah, we can probably get him. So let's start with Toshiba and we'll just go down from there. So Toshiba, Acer, GIAC, and STK here. All right, so I'm just going to buy them all up, merge them in, and I'll be back in a minute. All right, it took a little doing to get GIAC. Whoever it was that owned him just did not want to give up his share of the stock. So I went ahead and merged him and then did a green mail to buy back the 1% of our stock that was outstanding. I was going to buy STK here, but he's 100% owned by two different companies, 90% and 10%. And since he's so small, I'm just not going to bother with it. We're the only company really growing here. So now it's just a matter of paying off our debt and canceling any swaps. All right, industry's improving. We're still very capable. We still only have a 16% market share here. Let's cover this. I'd like to get that market share up, but the returns are just too low right now. He's got too much cash to really sell him short safely. Try selling him short, but he really doesn't have any debt. All he's got is just a really low return. I mean, his earnings are going down, but he's making a lot of money on the swap too. So anyway, okay, so that's it for IBM. Now, we can buy gold. We can buy gold. So let's go to all of our companies and buy gold. And when we come back, we'll look at all of our options again. All right, everybody got gold. Had to pay a little extra at the end there, but it shouldn't matter that much. I'd like to be able to do is sell off our silver. This price would ever go up. You have to be careful about oil. It's not falling like we thought it would. So let's take a look at these three options, and then we'll look at these three to see if we can expand in those industries. So let's go to Red Hat. All right, he's losing money on the options here. So Real Networks, his price has shot up. He's growing at a -7%. The industry is still deteriorating. His income is down. Income is down. He's got terrible debt, and yet his price is going up. That makes no sense. Just wish this return wasn't quite so high. But we'll just keep growing. There's nobody else to buy yet. So let's see what happens when they declare in May. And then we'll look at them again. Okay, so Fortis. May have to cover stuff here. It's about the same on Morgan Stanley, and Nomura Securities is turning things around. So despite our god-awful growth rate, their stock prices are moving up, which is kind of weird. We're finally reasonably competent, though. Let's lower our R&D to 12%. If I remember correctly, the last time we were here, his pre-tax return was 18%, and Morgan Stanley's was around 15%. I don't get why his price is going up. I mean, well, I guess since his income is higher, which is weird. Why would it be higher? Is Omega making money? No, his income's down. Alright, let's just take our profit on these, because their prices are they just keep heading up. There really isn't any profit to be had now. Our profit's gone. Alright, well, since I can either take a little bit of a loss now or I can sit on it and hope that this goes back down, and since the returns are coming down, I guess we're going to take the risk. Let's go look at Hewlett-Packard. Okay, so he's losing money on his options too. Industry's deteriorating. We're reasonably competent. I really want to lower the R&D because of this guy. So let's buy this guy since he's underpriced. Then we can lower our R&D to 8%. All right, so let's see. We don't want to lower our growth rate because we want to keep the pressure on this guy. Problem is he's got too good a credit rating and no debt. No debt at all. So I guess we're just going to take the loss here. I just don't think we're going to make any money on it, and I don't want to drive the earnings down any further for everyone else, including us, because these options are not worth anywhere close to what we have in assets. So let's go ahead and take the loss here, and we'll start growing negative. So we tried. All right, let's go take a look at PBS. Or excuse me, TBS. Income here is going up, despite the fact that he was found liable in some kind of lawsuit over TV violence. We've got 9.6%. We're very capable, but the industry is worsening. And we're starting to go into debt. There's nobody priced to buy, and the returns are pretty low. So, we're not going to buy anything there. Let's go to Lucky Gold Star. We're losing money on our options. We're growing at 40%. Asahi Chemicals is ready to buy, though he's mostly owned and he's pretty small. So I don't think we want to buy him. And he's still in terrible shape credit-wise. Stock's been rising, and the question is why? He's in bad shape. Has Del Webb's stock price been rising? A little bit. But his income's down. So we're going to take a chance and leave that one. Let's see, is there anybody to buy? Is it just the one? Just the one. So we will hold on to those. Let's go over to Columbia Healthcare. Still losing money here because we're grossly incompetent. It's time to restructure him. It's time to restructure him. There's nothing... We've seen no progress forever. So let's write off 10% of our assets and restructure. I mean, there's just nothing else to be done. We changed his management twice and we still have seen no progress. Now we can buy these other two, but I want to wait. I want to wait and see what happens with that restructuring. All right, well, we've done all that we could. Let's go check on CVS's options, and then we'll start working these stocks, starting at Komatsu. All right, so here we're mediocre. Got some debt. And we're starting to lose money on our options. Alright, so starting with Warner Lambert. His income was up in the first quarter. He's making money on the stock on the swaps. He's making money on the swaps. Our growth rate counts for nothing here. And McKesson he's making money on the swaps. And it's about 5% per quarter. I hate to do it, but I think we're going to have to cover those options as well. Because we need to lower our growth rate, especially with our market share getting that high. We already have 32. All right, let's go ahead and cover these. We're going to take a loss. Well, I wanted to get to these stocks down here below, but we're starting to run long. So before we end the episode, let's disperse any excess cash at these holding companies, and then make sure that all of our banks get the money invested in prime mortgages, because we're right at the end of the quarter, and they're all going to declare again here in the next week. So let's start with Crown. He does not have any excess cash, and neither does Peak, which is fine because both of those are the ones I own, and I have to pay tax on anything they disperse. So I'm just going to start at the top and work down, and just anything over $2 trillion on their net worth is what we're going to disperse. So in this case, 266 billion. And I'll just go down the list, and I'll be back in a second. Okay, so I've dispersed everyone's excess cash. And now we need to go to each of the insurance companies. I don't think Aetna is among them in terms of... I don't think he has a bank. He doesn't have a bank yet. And I forget how many stocks he owns. I think he's got 14. Let's see. So that's 8, 9, 10, 11, 12, 13, 14. So we need to get rid of one of these before we buy a bank for him. We'll just hang on to this cash for him for right now. Let's go to INGG. He's got an extra 429 billion. So let's give that to his bank. And we'll have his bank buy mortgages. He has 470 in cash and doesn't owe any taxes. So let's put 440 of this into mortgages. All right, now Progressive. He really doesn't have any excess cash. He's only got 13 billion. So we'll leave him alone. Let's go to Tokyo. He's got 447 extra. Let's give that to his bank. And he's got a lot of extra. Of course, he owes 50 billion in taxes. So let's put 550 billion into prime mortgages. And then finally Mitsubishi. He has a loan. So let's just put this towards a loan. And when we pay our taxes, we'll be out of cash pretty much. All right, let's look at RakeM Insurance. He's got $1 trillion in excess cash. Let's subtract this. He's got 1.5 trillion actually in excess cash. Minus this would be 1.3. Let's put 1.25 trillion in Bank of RakeM. All right, so Bank of RakeM has almost $8 trillion in cash. And let's assume that 2 trillion of it is going to disappear when all of our companies pay taxes. So let's put, let's see, let's put 4.5 trillion into prime mortgages. All right, so our index is way, way up. And gold's getting up there too. Everything's kind of up. And we got some maintenance items that we'll do on the banks and the insurance companies when we come back next time, and then hopefully we can start working these other stocks. But we'll see what the update reveals when I update the spreadsheet between this episode and the next one. All right, but that's it for today. Thank you for joining me. I hope you enjoyed it. If you did, please like and share. And until next time, this is RakeM saying, have a good one.